Hi everyone. Chalo. So now ready for the RBWM paper? Very much ready, right? So now we are also ready. Today we'll be doing mini marathon. There is a series of marathons now. Today A plus B, tomorrow C plus D, then PYQs plus one more, then Maha marathons. It's a complete sequence. Don't miss the timings. Okay? From today we are starting this marathons. Okay? So don't miss it. And also kindly remember we are starting with the batches also. Okay? RBWM revision batch is starting. I'll tell you at the end. Don't miss that also. Today will be A and B. Mostly here 90% questions will be from A and B. 5 or 10% I'll take it from others also, because everything should be balanced. Okay? But after all, it's from your same portion. So 90% everything will be from A and B only. Okay? And kindly note this, share this with your friends, like the video. Everyone like the video. We'll be having almost 2.5-3 hours mini marathon today. So like this video and you'll get many new inputs. I won't just give you the answers. I'll give you answers as well as explanations. All of them. So I'll be giving you everything. Okay? So don't miss and watch it till the end. Share it with your friends, everyone. Do share it. Right now do share it with your friends. Like the channel. Okay? So, first question. Customer's expectation of service quality mainly depends on which of the following aspects? So what does the customer expects basically, you tell me. Whenever any customer comes to the bank, what does the customer expect? What does the customer feel when he or she comes to the bank? Tangibility in services, reliability, responsiveness, and this last one is assurance. What does the customer want from you whenever this customer comes to the branch? What are the aspects? What do you mean by this tangibility word? Tangibility means what? Tangibility means whatever you see in the branch. If your branch is dusty, suppose if I come to your branch or you come to the branch, forget it, forget I. You come to the branch. Tomorrow you see the branch is dusty or everywhere dust is lying, fans are having used dust. There are a lot of files lying on the table. Will you feel like working? If you don't feel like working, how will the customer feel in that case? Isn't it? So that's why the tangibility means clean, posh, cleanness, brightness. Customer likes cleanness nowadays. In fact, every time he liked, but nowadays we are focusing more on this. So tangibility in services. Reliability, reliable. How much reliable you are? What do you mean by reliable? If customer gives you some work, you should be able to do it. When you promise something, you should be doing it. Okay? Next, responsiveness. If customer has some queries, you must be able to respond to it. Very important. If I come to you for something, sir, this is my check not getting passed or some problem in this check, and you are saying, no, leave it, bahut kaam hai aur. Responsiveness. You must be able to respond to the customer. How will the customer come back otherwise? Right? Responsiveness. And last one is assurance. You must make this customer feel at home, comfortable. Assurance. Yes, you come, we will do it. Assurance. So what does the customer feel like? Means on what it depends. So it is D. All of the above. 1, 2, 3 and 4. Customer wants everything. And in fact, why customer? You think about yourself also. You also want all these 4 things, isn't it? These 4 elements should be there. Only then we will feel like working in the bank, isn't it? Liability product differentiation is very thin in different banks. But the following factors distinguish the product from one bank to another. Means what do you mean by this? Liability product differentiation is very thin. What do you mean by this? It means saving is a saving. You go in Bank of Baroda, you go in SBI, you go in PNB, you go in HDFC Bank, you go in ICICI Bank. Saving is a saving. Current is a current. So there is no hardly any differentiation. But then also what happens? What does the customer, what it differentiates? Why some banks are having more CASA? Why some banks are having more HNI customers than other banks? Why? What distinguishes? What is the distinguishing factor? Number A, technology and delivery only. Number B, process and delivery only. Number C, technology and process only. Number D, technology, process and delivery. Now look at this. This is not that simple. Delivery means what? See, technology means what? Latest technology. You should have the latest technology. That is by default nowadays. Every customer wants the latest technologies. You also, don't you want the latest phone, mobile phone? Would you like to buy that old Nokia phone, button phone, tuk, type M 3 times to get something, right? You know, remember this? Old Nokia phones? Do you want that? No, latest. Everyone wants latest laptop, latest mobile, latest gadgets, latest movie. Similarly, latest technology. Process. Your process should be fast, very fast. There should not be any loopholes, lacking in this. Otherwise, what happens? Earlier, you remember the home loan, 2 months, 3 months, home loans. You come today, 3 months. Now, home loans, 7 days. 7 days is a lot of time. In 1 day, you have to give the assurance. Isn't it? Process, fast. Delivery. Delivery means here you include people also. People. How your employees are responding to the customers. That is delivery. So what distinguishes? Why does some bank like HDFC, ICICI have the cream customers? Technology, process and delivery. All. Main part is this delivery. Technology and process are roughly the same in all the banks nowadays. Roughly the same. Next is delivery. In delivery, what you have is here. I'll give you some important points. People. People the customer deals with. Second, TATs. Turnaround times. Very important. TATs. TATs are the important factors which distinguish any bank or any financial institution from the other. TATs. Very important ones. Okay. Next. Read this. To enable the customers to partially withdraw the term deposit without disturbing the entire amount and resultant loss, banks have given what? What do banks offer? What do you mean by this question? Partially withdraw means I am having a FDR of let's say 1 lakh rupees. I want only 20,000 out of it. But I don't want to disturb that FD or that remaining amount. What do I do in that case? Offer penalty FD, no penalty FDRs. Inject an unfixed component in the FDRs. Offer overdraft facility. All of the above. What is no penalty FDR? No penalty FDR means suppose if I break the FD in between, generally we charge 2% penalty. So no penalty means bank will say you withdraw it anytime. No penalty. In fact, I had seen in HDFC Bank, they had this no penalty FDR. You withdraw it. We won't charge you any interest, penal interest. Unfixed component of the FDR. This is also an important part. Unfixed component means if I make a FD of 1 lakh, the bank will say, okay, out of this roughly 30,000, I'll keep it unfixed. 70,000 will be the fixed portion. Interest will be same on that, but they will make it unfixed part. So whenever I withdraw it, that 30,000 will be withdrawn, unfixed. Allow this overdraft, FDOD. This is FDOD. This is one of the best tools, right? FDOD. No complex, no complexity, no technology, nothing unfixed, fixed, nothing. Simple FDOD. I am having a FD of 1 lakh, keep it with you. Give me 90%. Okay? So 90,000 is the OD facility. As much I want, I can use it. So what all is offered by the banks? Banks will give any of these, all of these. Banks give all of the options. Depends on bank to bank. Here, all the banks are not having this unfixed component. All the banks are not having no penalty FDR. Some banks, but every bank gives one or the other facility. This is given commonly by all FDOD. Okay. Among the given, which of the following stages are involved in CRM initiative? CRM. What is CRM? CRM means Customer Relationship Management. One of the chapters for you in your JAIIB, in RBWM. It's a separate chapter. CRM is mainly used for HNI clients. HNI. Okay? All the HNI clients you have to track using CRM. Why? So that they give you better business. What happens generally, I'll tell you. It's a 80-20 principle. 80-20 means what? 80% of the business you get it from 20% of the customers. Only 80% of the business from 20% of the customers. That's 80-20 principle. So these 20% customers, you track it using CRM. So which of the following are involved in CRM initiative? Offering products and services to the targeted and segmented customers from the information buckets with the right pricing. Such a big sentence. Here, offering the products and services, simple, to the targeted and segmented. It means one and the same, targeted and segmented. We segment that customer, that this is HNI, this is this ultra HNI, and we offer those products. From the information buckets with the right pricing. Right pricing, this is very important, pricing. Everything in this world depends on pricing nowadays. Everything depends on pricing. If you give home loans at, let's say, 12% today, nobody will come to you. Okay? Means I'm talking of banking. NBFCs do give 14% also they give in the home loans. But if you're talking of banks, it's hardly 8.5% nowadays. Isn't it? So, right pricing. Providing the right sales and service processes to achieve total customer satisfaction. Now it's up to you to answer. You have to answer me. I'm just giving you the explanation in the meantime. Answer me. Let me see in the comment section the answers. Okay. I want it in the comment section. Providing the right sales and services processes to achieve the total customer satisfaction. Isn't it? Right sales and services. Satisfaction. That is the ultimate goal of any bank. Nowadays we are going from customer satisfaction to next step we are in customer delight. Delight means you give something extra to the customer, what the customer has not expected. Means what do you mean by delights here? I'll give you a simple example of satisfaction and delight. Here, I come to you to open the savings account. So satisfaction means what? You open that savings account, give me my debit card, checkbook and all these things, satisfied. Delight means what? You give me additional, means you give me a term insurance free when I open the savings account. Delight, you're giving me something extra. Who doesn't want free? Everyone wants something free. Delight. Okay? So, providing the right sales and services processes to achieve the total customer satisfaction. Tracking the customer information on a dynamic basis to design new products and services to meet the changing dynamics of the customers. So tracking the customer information, here tracking the information of that customer on a dynamic basis. Dynamic means constantly changing. The information is constantly changing. The customer is constantly changing. Requirements are changing. To design the new products are to be designed. Design the new products means design the products. New products, what do the customer want? Customer wants FDOD, customer wants no penalty FDR. New product, go on designing. Customer wants credit card. And services to meet the changing dynamics of the customers, means changing requirements. So why do you use CRM? Let me see in the comment section. Correct? All of the above. We use CRM for all of the above. Because all of the three are the requirement of the banking today. Bank requires everything today. You can't even leave a single point out of these three. Otherwise, competition will catch you. Okay? Next one. Read this. Very simple one. This is the simplest one. Which of the following is not a part of promotion mix? Most simplest one. Promotion mix. Public relations, advertising, direct marketing, and place. Yeah. Which of them is not the part? Not the part of promotion mix. Firstly, what is promotion mix? What is promotion mix? There are 7 P's in banking. What are the 7 P's? In those 7 P's, this promotion comes. What are the 7 P's? Here, product, price, place, promotion. These are the 4 P's mainly of product. 4 P's are these. And then in services, we add 3 more P's. People, process, and physical evidence. Okay, evidence. So physical evidence. So these are the 7 P's. Now what about this question, promotion mix? This is the promotion mix. So what is there in promotion mix? And what is not there in promotion mix? Here, promotion means what? Advertising. I need to tell the people that I am having something. Okay? If you don't tell, here, it's always the crybaby's concept. Crybaby means what? The baby which cries gets the milk. Simple logic. So if you have something, you tell to the customers, tell to the general public, then only they will come and purchase. So which of them is a part? Public relations? Yes, you have to be there. You have to speak to the clients. You have to maintain the relationship. Good customers, HNI customers, strong customers. You have to always maintain the relationship with them. Advertise. You have to go on advertising. That's why we are seeing nowadays advertising has changed a lot. Earlier it was only newspapers. Then it was television. Now television is also gone. Now it's social media. So advertising, direct marketing means human being, directly involving the human being. Door to door. Go door to door. You see those door to door coming in? Again, direct marketing. So that is also place. What do you want? Not a part. Place is not a part of promotional mix. See, this place is separate. Place is a part of 7 P's. Okay? This total together is known as marketing mix. These 7 P's are known as marketing mix. So place is a part of marketing mix. It is not a part of promotion mix. Okay? Promotion is also a part of marketing mix. So place is not a part of promotion mix. Okay? So that is the answer. Got it? Clear everyone? Type yes in the comment section if you have understood it. Understood? Move on to the next. Chalo, let's move on. Type yes everyone. Let me see if you have understood it up till now. Move on. To make the FD to function like a current account, banks offer what? FD and current account? How? How can this be mixed? FD is FD, current account is current account. Current account is for daily transactions. FD is one time, just keep it once for 2 years, 3 years, 5 years. Forget it. At the end, get the amount. What is this FD and current account mixture? Offer cancelable FDRs. Offer no prepayment penalty FDRs. Offer overdraft facility available to the FDRs. And all of the above. Just now we saw one question similar. At that time the answer was all of the above. Here, what will be the answer here? offer like a current account. So FD will act like a current account. Means what? I'll be able to use this FD. Okay, like the current account. How should I use it? This is for daily transaction, daily, and this is for once. So how can I mix these two products? For mixing these two products, can I have this cancelable FDRs? If I'm cancelling this FDR, cancelable means no penalty again. But then it doesn't remain the FDR, right? I want the FD also to be there and function like the current account. So after cancelling it, it will be transferred to my savings or current account. So that is not the option. Offer no prepayment penalty FDRs. No prepayment penalty. Means the same similar ones. Whenever I want to just withdraw it, I can withdraw it without any penalty. But then also, in that case also, where is the FDR? FDR is gone. But I want the FDR to remain. That is also gone. OD facility on FDR. This is something, yes. Because in this what happens, FD is of 1 lakh. I'll give you 90,000. So both are remaining. FD is also there. 90K is also I can use it. This is the OD facility. Whenever I want, I'll use it. Whenever I don't want, I'll repay it. I'll pay it into this. I want the withdrawal. Let's say I want today 50,000. So I'll withdraw 50K. Tomorrow, let's say I get 40,000 out of it. Somebody gives me 40,000. I'll deposit it. So it's like the OD account, current account, CC. So here it's acting like the OD. So whenever you want a FD to act like a OD, use FD OD. Very important one. Okay? Clear everyone? Next. Among the below mentioned statements, which of the following is correct? Always in exam check what is asked. Correct or incorrect? What do they want? Do they want correct or do they want incorrect? Otherwise what happens? You know the question and you miss out because you don't read the question properly. Roughly your 7 to 8 marks will be saved if you read the question properly. Okay? So which one is correct? In the debt market, investors and traders buy and sell shares of the stocks. Means shares, buy and sell shares. Let's say simple. In debt market, investors and traders buy and sell shares. Shares of stock means basically it is same. Shares in stock is one and the same. Okay? So shares or stocks in debt market. You are having a separate topic on this, wealth management. This mutual fund is a topic in this. Next. Stocks are stakes in the company purchased to profit from company dividends and or resale of the stock. So stocks are stakes in the company. Stake. Is stock the stake in the company? Purchased to profit from the company dividends. Means whenever I purchase the stocks, do I get dividends? Why do I purchase the stocks? To get some dividends? Or resale. Resale means whenever the price goes up, I'll sell it. Is it the same? I want the answer from your side. I want a correct answer. In equity market, investors and traders buy and sell bonds. In equity markets, do the investors buy bonds or something else? Equity instruments are essentially loans that yield payments of interest on to their owners. So these are loans. Equity is a loan. What is it? So which one is the correct one? Let me see in the comment section. I'll give you the explanation. First, give me the correct one. Yes? Okay. So I'll give you the answer. The answer is this. B. Stocks are stakes in the company purchased to profit from dividends or resale. Shares. Whenever I buy shares, I'll get the dividend from that share or I'll sell that share at a higher price. That's a simple logic. What about this? In debt market, see here, A and C are related. Debt and equity. Look at this. Debt and equity. They are related. They are exactly opposite. In debt market, investors buy and sell bonds. So bonds are done in this. These are done in debt market. And in equity, we do stock shares. It's exactly given opposite. Equity market shares, debt market bonds. We buy and sell bonds in debt market. In the secondary market, that's called a secondary market. Equity instruments are essentially loans. Is it loans? No, equity instruments are not loans. These are investments. Investments. Loans are, bonds are loans. Kindly note, bond market is a loan. Here, there are basically three types of markets. Okay? Equity, debt, and liquid. Okay? Equity, debt, and liquid. Basically, debt and liquid is same. Only liquid is safe. Safest one is liquid. This is also bond, that is also bond. Liquid is generally government bonds. Government. Gilt funds we call it, gilt bonds. Which are safest one? AAA rated. AAA plus. Sovereign rating. Government rating. Liquid. Debt is basically of the private companies. Debentures. Debt. There is a slight risk involved in it. Because the company might fail. But equity is heavy risk. Heavy, completely risky instrument. It's an investment. Either you make money or you lose money. Simple. Okay? So these are the three markets. Got it? So coming back to the question. So debt market you got it. Equity market you got it. Equity instruments you got it. Okay, so the answer is clear now. And even the wrong answers are clear now. Here, not only the correct answer, you should know the wrong answer also. Why it is wrong, isn't it? Group life insurance covers group health. Covers and group health covers are offered by bank with. So group life insurance are offered by the banks for what? Means why does the bank give group life insurance or any life insurance cover? Generally group life is given to the bigger companies. FDR, saving and current accounts. FDR and current accounts. Savings account and FD accounts. Savings bank account and current accounts. So group life insurance is offered by the company, by the bank. Okay? It's a basically free privilege it is offered by the banks nowadays. Means customer delight, I told you now. I come to you for opening the savings account, you give me extra. Along with the savings, you give me life insurance also. Term insurance. So, group health, life and health. Where do you offer? You offer it to any of these products. Any of these. FDR, saving or current. Depending on what your requirement is. Here, very simple. If my bank wants to increase the FDR, I have less FDRs. I want to increase the FDR. Health insurance with FDR. I want to increase my CASA, current account, savings account. Health insurance with CASA. Whatever I want, it is just an additional privilege given to the customers. Additional, like ice cream toppings. I am selling you ice cream. And then I will give you vanilla flavor, chocolate flavor, this flavor, that flavor. One-on-one free. These are all the marketing gimmicks. Okay? Got it? So group life insurance covers and health insurance covers are given as a toppings. Toppings on that ice cream. You buy the savings account, you buy the current account, you buy the FDR, you will get life insurance. Even if they are given on credit card also. You buy the credit card from me, I will give you health insurance free. So let's start. A bank deposit of rupees 25,000. This is rupees 25,000. Rupees 25,000 will earn an interest at the end of 1 year. If it earns 10% compounded half yearly, so what will be the interest amount? Very important part over here. Because here it is compounded half yearly. Now let me explain you few points about this. What do you mean by half yearly? Okay. Whenever you have to do the compounding, Firstly, understand compounding means what? You have to use the formula. Which formula? A equals to P into 1 plus R raised to N. A equals to P into 1 plus R raised to N. Let me write it bigger. A equals to P into 1 plus R raised to N. A means what? The end amount. Amount. P is the principal. This you have studied in your schools, colleges also, right? P is the principal, R is the rate, and N is this period. But now the real catch comes. The real catch